All right. Hello, everyone, and welcome back to another Pepperstone live stream here. It is a violent week in markets in terms of the volatility. We have Microsoft AMD earnings just out of the way. Obviously, many large companies still to come: Meta, Apple, just to name a few, including Amazon. And this means that we have a tale of multiple different markets. Some cryptos are doing well, some commodities are doing pretty poorly. And of course, all this volatility is great for us traders and investors. We're excited to get into today's session. We'll be covering stocks, commodities, and cryptos. And as always, if you have any questions, please put them into the chat. My name's Thomas, and I'm joined by Tyrone this week. Ty, volatility is here, and it might be here to stay for a few months. Hey, it's going to be exciting.
It's pretty exciting. Boy, oh boy, even today's swings were quite exciting. The market's changed significantly in actually the last 12 hours. So you're looking forward to getting into it.
Yeah, absolutely. So just before we get started, guys, we've got a quick risk warning, and then we'll see you on the other side. Okay, Ty. Well, I thought the best place for us to start today might actually be the NASDAQ because, of course, this has been the most interesting move in terms of the last week, other than some of the commodities we'll get into today. And that's because it's been so volatile. We actually entered into what we call correction phase. Now, for anyone that doesn't know, correction phase is something where we see over a 10% pullback in a market or a currency or a commodity or anything like that. And it's not that common actually in stock markets. It tends to only happen maybe once a year. This year, we've had a couple of corrective paths in the semiconductors market, and then it's gone flying up. And as you can see here over the last 24 hours, it actually came back to one of our major bull zones and found some pretty big buying pressure. As always, Ty, I guess one of the things that I really want to talk to everyone out there about today is we're going to go through a couple of setup strategies in today's video, along with our live analysis. So you can kind of get a bit of an idea of how we would structure a zone and start to really look for that area that we could scalp or day trade or even potentially swing trade into the future. And the NASDAQ is a great place to start because it's coming off so many different things, Ty. It's coming off this trend line here that we've got through the lows. And do you want to walk through to everybody out there, why do we consider this a valid trend line more so than some that people draw?
Yeah, absolutely. The first thing that we're going to be looking for, and really the most basic way to identify a trend line that is actually valid, and what we call a valid trend line, is when we get a series of higher highs and higher lows. You hear Tom and I talking about higher highs and higher lows all the time, whether they're coming off a moving average or whether they're just coming off a landing base of support or away from resistance. But what we can see here is a touch of the trend line, a higher high, a pullback to what would be the trend line continuation. And then the most important thing, a break of that previous high. Now we get a retest, and we can see we've got 3 valid touches of the trend line, but we've also got the lightning bolt, what we also call a lightning bolt of a series of higher highs and higher lows, which actually validates the trend line. So where we've drawn that dotted line, the horizontal dotted line there, that's actually the validation point. So once that's been validated there, it is good to go. Once it retests that trend line, we're all in, aren't we, Tom? Basically,
well, I would never say all in, but we certainly like the zone for sure.
Yeah, no, we absolutely like the zone. When I say all in, we're talking about a level where we are good to go. All the signals are there. Coupled with the shooting star, the hammer candle there, that we've got right on that trend line as well, gives us a bit of a bonus as the trend line gets touched. But really what we're looking for is a break of that zone. So once we've got a series of higher highs and higher lows, comes back and tests the trend line, then we're off. So that's what we're looking for.
So we'll break this down a little bit further in just a moment, Ty, but let's give a shout out to everyone that's joining us. We've got some people in the chat saying hello, so we should definitely say hello back to them. We've got Big Silver, Grace, Gary, Michelle, Wollongabba, Original BTC, Lock Keywood, Michael M, Mark Knight, Aussie Cobber, and many, many others that are in the chat out there. So thanks for giving it a thumbs up if you enjoy this content, as well as being in the chat. It's great to have you here. So yeah, as we mentioned, big earnings season's high. Then we put on top of that the price action. One of the mottos that we always talk about, we think it's really helpful. I just worked it out the other day. I've been doing this for 17 years now, so quite a while, half of my life. So when you think about it, when you actually break down, if I was to able to go back in a time machine, Ty, and kind of think about my first couple of years of trading, what I would be looking at doing is staying away from making impulsive decisions and instead having the patience to react to key zones. It's such a big thing. I think where the markets are working towards as well is that if you want to be a successful scalper or day trader, you've really got to be finding zones of interest where larger, higher time frame traders are actually adding to their positions. And this is a classic one of that, because as you know, we find this trend line, but then on top of that, we also find a couple of other things where we get classic kind of resistance becomes support, which is what we call role reversal. And then we also get the classics of demand structure, which is this area in here. So all of these different types of technical analysis tools, support resistance, supply demand, and of course, trend line action, all culminates into this very interesting area that we hit over the last 24 hours. And you'll notice here at the time of this recording anyway, we've actually seen some pretty aggressive action off this level with the full rebound from yesterday's fairly brutal sell-off in semiconductors. And this is mostly thanks to earnings, but also I think really the technical level being hit. That's the thing, Ty. We can always come up with an excuse of why it's bouncing up or why it's going down. But ultimately, this level was always of interest to us as day traders and scalpers, wasn't it?
Correct. Yeah, absolutely. And it was very, very important that it actually bounces off this level, because the next level is pretty low. It's very, very important to understand levels. Look, it's one of the most important things when it comes to trading, really understanding where a good level is for not only a potential take profit, but also a reload zone. So there's many, many reasons why support and resistance are important, and understanding the most important ones valid to what you're looking at is extraordinarily important. It's very, very important.
So let's break down the smaller time frame then. Let's say we thought 18,550 or 18,537, as I have here, is an interesting box zone. Based on that, support becoming, or resistance becoming support, demand becoming possible level of demand again. So therefore, we're going to get some type of possible purchasing there, and the trend line. Well, when we get a reaction off that, we should be paying attention. And here we're down to the 1 hour chart. So what we've done is we've gone from a weekly chart all the way down to a daily chart, then into a 2 hour chart, then into a 1 hour chart. And what I noticed here, Ty, is one of my classic kind of setups that I like to see around these zones. And I thought I'd walk it through everybody, which is that it looks really negative. Okay. So you come in here and it goes down, and you're seeing like a series of like a high, a low, a lower high, a lower low, what looks like a lower high, makes a lower low, and then it changes to the upside. Now, remember, we expect based on the higher time frames, there could be a reaction here. And on the 1 hour chart, if you have the patience, the key here was really to recognize these two candles. It's what many people call a tweezer, or at least a rejection style zone that looks like the shorters are big time on this. And what's happened is this market has said, nope, we're going to give a wick. So the wick is basically, in my opinion, showing excitement in the market. And then the excitement is pushing the market back above this high, which is leading to the market then moving towards what I would believe is the next level of equilibrium, which is around this 19,100 zone. So for scalpers and day traders, this was a pivotal candle along with this storyline here throughout the overnight session. So coming into today's US Open. And of course, as we know, today is filled with news. So everything could get problematic here. This is basically where the bears sit. And if the bears want to push it back down, they get underneath this area. As Tyro mentioned before, that's really bad, isn't it, Ty? That's going to send shockwaves through the market if we manage to get back under that level now.
Oh, absolutely. Yeah, that's one certainly to look out for. So now we would be very, very interested in that level. And that's why it's really important to mark it down as a key point of interest. Even if it's just an alert, you do absolutely need to consider that level.
Yeah. So where do we go from now? Well, of course, we're back into where we've seen some problematics areas. We already had this area marked out at 19,229. And if we manage to breach above this point, I think that's quite bullish. I would say that would move momentum on the 1 hour, 2 hour, and possibly even daily timeframes towards what we call gap fills. And you'll notice a lot of this started over here. Now, what this actually was, it was the Tesla earnings and the Google earnings. They came out to a degree. They didn't really meet Wall Street's lofty expectations, but let's be real. I think they actually met them pretty well. It was just an excuse. And if the markets now rally above this point, that is kind of pointing towards this gap fill. And gaps are another big thing that you can use along with your trading tools on Pepperstone and TradingView platform, where you can look at like maybe the NDX as a code. You won't trade the NDX, you'll trade the NASDAQ, but you can look at where the gaps are. And then you can say, well, often markets will go on to fill gaps. So today, what's actually going to be happening here, Ty, is we're going to be opening with a massive gap between where we closed in the previous session and where we are today. So the chances are, or there is a possibility that we could do this, then this, fill the gap, and then move up to this next gap. And this creates what I would call like a chess kind of setup. You're looking for these ideas that where the market has said, you know what, I am moving towards that next level of what I call equilibrium, which it could be the next level of bear bust zone, like down up here, or it could be, you know, the next level of where the dip bull buyers are going to be. But once you see that pivotal switch, that can give you a bit of bias that you can then use on the smaller time frames to bring along with your system, whether that's a stochastic system or a MACD system or anything else, moving average system, or even just price action. This is the kind of way I always think about it. So I think the NASDAQ is prepping at the moment, coming into the FOMC. It's in the bear area where there could be some bust. But after the FOMC today, if we go through 19,229, that's opening up the real possibility of filling to this gap. And that's kind of what we always look for in trades, isn't it, Ty? From one area to the next area that is got the highest probability.
Absolutely. And trading that intra-session is always the way to go. Like you don't want to be trading the NASDAQ in the middle of the Asian session, obviously. So understanding these zones, doing your homework, because you're going to get the moves. The real moves are going to generally happen inside that market's open. So very important to understand the time frames that you're actually trading, but also the sessions that are actually you're trading in. Very important concept.
Now, I actually shared some data about the FOMC, Ty, and I thought I'd share it here. So this comes from Bloomberg source. Stocks and bonds tend to rally around Fed meetings. Weekly moves during FOMC week. So if we go and we have a look at the last 1, 2, 3, 4, 5, and 6 times, this is the last 6 times, we actually saw S&P 500 ends the week bullish. Now, that's not to say that it's going to every time. Of course, that's just a data stat. But if you start to see the signs of price action going bullish, that can be helpful. So that's actually over on our X account, on FX Evolution X account, if you're interested in having a look. And it's a good little stat there, just so you can see how the FOMC has reacted at least the last 6 times, along with the price action. The US 500, Ty, it's the exact same thing pretty much. No new lower low, but as you would say, probably here, more of a double bottom style pattern. And again, finding itself straight at the resistance. And as Wollongabba says in the chat right now, it's the FOMC day. And typically what can happen is we go one direction, then we go the other direction. So the possibility is something like this would be pretty big, because when we get their statement, then we get a conference, which comes 30 minutes afterwards. So if you are a scalper or day trader and you're not aware of the FOMC days, just remember there is a conference that happens after the overall statement, and that tends to move the market, sometimes even in the opposite direction. So it goes up one day or down one way and then goes the other way. It's like non-farm payrolls, which is also this week, Ty, on Friday.
It's a massive week, actually.
Yeah, it is a massive week. It cannot be understated. This is the biggest week we've had probably all year when you think about all the big bits of stats coming in.
Yeah, and some of those, I mean, coupled with some of the biggest earnings announcements this week as well. Like on Thursday, we've got a couple of very, very big ones that could potentially influence the market. Looking forward to it, actually.
All right, well, let's just quickly go the 2 hour here so we can see a double bottom pattern. One of the things that we often talk about in patterns, Ty, is proofing them. So let's say, again, we've got this idea that, well, this is where, of course, there is a most traded zone, but also the last major bear area. Why? Because that's where the Google Tesla is on the S&P 500. And what you'll notice, if you take the distance of the double bottom, if it does break out, notice it goes to the 5580 high, the resistance, the absolute high of the resistance. So that's what we call proofing. Basically, if A is going to equal B, does that make sense from a price action standpoint? Now, I think this is going to be where there's going to be some troubles, which is about 80% of the way through. But it's great to see a proof, isn't it, Ty? It really adds extra value to your analysis when you're looking at it from a pattern-based perspective. Absolutely.
It gives you the validation sometimes that, look, when patterns do validate themselves, I'm always a lot more comfortable. I'm not going to lie, because for a couple of reasons. One, you know that you've got the entry point coming up, but I think it gives you validation for your exit. I think that's probably the most important thing, Tom, knowing that the exit of a pattern is coinciding with obviously a very important level that it would get to probably more than likely. Otherwise, even if there was, in this instance, even if there wasn't a double bottom there, the market's probably going to head towards that direction anyway. So double bottom is being validated by where the market's probably going to anyway, just simply because it's a supply and demand area. So
Mhm.
having multiple confirmations is always very important. But pattern validation is one of the big cornerstones of the trading that we do, actually.
Yeah, I always like a good pattern
Yep.
confirmation and the reason or validation. The reason is, as you mentioned, at least you have a target. And then if you want to say, okay, 80% of that target is where I think it is based on supply demand as well, it starts overlapping. And that's a beautiful concept. All right, well, let's go through some other pairs. I want to actually bring up a couple of pairs here. Obviously, gold, something we've long loved on this show that we do every Wednesday. Make sure to
Mhm.
click in the description down below as well if you want to get all the updates, because we do this every week, so you can trial along with it. But gold, we've long suspected is quite bullish, and it seems to be kind of coming through with some more excellent trades. I just want to go back to the daily. So we talked about the idea, the actual blue line here is going to be throwing Tyrone off a little bit. I'm pretty sure I've set this one actually to the 20 moving average. Let's just have a quick look here. I had it as 50 and then I was moving it over. So I'll just have a quick look. But that's on the watermark. But anyway, this basically is, I believe, the 20 moving average. So what we've got here is we've got a very key level of demand or support. We've got a market that's come down after making a new high. So this is what we call a melting up market. Basically, it's making a series of just higher highs. Some people can look at it as maybe a slowing or weakening market, but I like to call it dull. So if you ever see these in currencies or you see these in commodities where you've got these slightly higher highs and it keeps making a series of higher lows, most importantly over here on the right-hand side, often that can be a bit of a symptom of a market that is going to still move higher. It doesn't look that great, but actually it's dull. And there's a saying, Ty, do not short dull markets unless you're going to be very nimble and fast, because they can really hurt you and they can continue to squeeze higher, can't they? And in particular, indices. But I also notice it in gold. So gold had a exceptionally good trade here. That's actually part of our day trading masterclass course. It pretty much is fully replicable, this particular position. But I like 23.56. I like 23.30. They were all good buy zones or areas of interest. And then we saw this really nice 61.8 pullback here, plus some other things that were great for structure. And so far, it's making its way back up into here. How important, Ty, is this 24.30 to swing traders and the overall health of gold continuing up in the dull kind of, up bull run? This is a big level, isn't it?
It's huge. It's absolutely huge. Yeah, no
Walk
doubt
us
about
through
that.
why do you think it's so big?
Well, for starters, until it actually gets past there, we can't go long. I mean, realistically, I mean, that might sound obvious, but when you know that there's a zone in front of you that is really a bit of a roadblock to potentially hitting an all-time high again, which is not very far away from. Let's face it, it's not very far away from where it's basically what did it get to? Nearly 20, almost 2,500,
almost 24.83, something like that.
Yeah, it got really, really high. But the problem that we face here is if it doesn't get past that where that wick was, previously, 6 or 7 days ago, and does roll over here, that could be the signal that we're actually going to go short, because that could be, for starters, push all the way back down to 23.50, which is where that baseline is. And if that breaks, you're talking about a complete change of trend. You're talking about a big time frame change of trend at that point, which is a daily, so a series of lower highs and lower lows. And once that happens, the market could potentially be in big trouble. But on the flip side, though, if it does exactly what we've drawn up there, and we get a series of higher highs and higher lows, then Thomas's dream is going to come true. And potentially it's going to push up to 27, 2,800. It is his dream. So it's a very, very key level, because it's a defended zone in the sense that if it does get broken to the upside, it really does open up a big avenue to an all-time high. But if it fails effectively to go any higher from here, and happens to get down below 23.50, you might think we're talking out of school, but it happens all the time. These swings can happen in a night. Don't be surprised if it's trading there on Monday morning after non-farm payroll, and all of a sudden we're looking at a very different scenario. I've got to say on record that I don't really mind either move, Tom. I'm not really totally upset if it actually shorts from this zone and breaks down below 23.50. I think that's a trading opportunity in itself. But I'm also not fussed if it goes higher, because this is one of those ones where I think that you can make a very equal case for a long and a short for a decent move without a lot of problems. You can't say that about everything we look at. Like I don't really want the Nasdaq over 20,000 just yet, because I think that makes it hard to trade. But with gold, I think I'd be just as happy at 2,800 as I would at back to 2,000.
I had to go full screen here. I cannot agree with this sentiment. I don't want it down, no doubt. But no, in general, in general, yeah. Look, we as traders and investors, maybe I've got a longer term bias. Of course, I do, built on macro features as well. But at the same time, I am open. I think it's an important factor. You've got to put your trader hat on and your investor hat on. And they're totally different scenarios. As an investor, I would probably not want it to go down unless I want to buy more of it. Yeah. But as a trader, you have to be open to that switch. And I think that's a great point Ty brings up. He doesn't mind because obviously he's doing all the trading aspect. But at the same time, I would also need to look at it that way. And I think this is where so many traders and investors, or let's say both, we're usually both, let's be real. We're mostly, everyone that comes in has investments and has trades. It's where we make big issues, big problems, because we're not able to look at both of them as separate accounts. And I would actually suggest, if you ever do set up like let's say an investment account with Pepperstone and a trade account with Pepperstone, maybe segregate them to separate accounts, which of course you can do inside the platform. Speak to your local kind of Pepperstone representative about it, because this will allow you not to see your investments or see your longer term stuff while you're seeing your shorter term stuff. And I've done this, Ty, before, where I've clicked on the investment side and closed it because I had a couple of bad trades and I thought, just take some investment profit. And then 4 weeks later, believe me, I was regretting that one. That was no good when you do that. So yeah, you've got segregating them is certainly worthwhile.
Yeah, it's actually a good strategy. It's a very good strategy because it makes you trade properly.
I like that. Yeah, it works really well. A lot of people have done it. We've actually trained people and they've done it that way. And the reason we bring it up is because I know it was a problem back a long time ago for me. And I also know it's a problem for almost everyone, actually, Ty, when it comes down to it. Okay, let's move over from gold then. We still think that looks pretty good. Silver also putting in some decent work. So let's have a look at silver. Then we'll go over to, of course, the US dollar and oil, because they've been moving pretty heavily. You can see here silver finding some base. Now, it didn't come down to my green box zone that much. It only hit the top of it, not really heavily into the green box. But I think silver is kind of similar to gold, except it's further away. It really, to me, if it goes above 29.50, to me, that's a huge move from silver. But I feel like gold is in front of silver right now in terms of price action. So silver, yes, it looks a little bit bullish. Yes, it's similar, but it's still got a lot of work to do. I don't think you'd have too much difference of opinion then, Ty. A lot of work to do, yeah.
I think it's actually got a brick wall in front of it at that that sort of 28.80. That's a roll reversal zone. If you take it out to a daily and draw a horizontal line right at 28.80, you're going to see effectively a triple brick wall, potentially stopping it from moving forward. Now, if it gets past that level, we're talking a very different language. But boy, oh boy, it wouldn't want to reverse here, because if it does, that's a classic case of sell-off. And at that point, it would have made a series of lower highs and lower lows on a daily chart as well. So be very, very cautious at this level. I think trade this level with a great deal of caution, because even though it's rebounded a little bit, I think you'll find it's only a 38.2 pullback of the initial move from probably 31.50. It's a very shallow pullback. It's very shallow. If it gets to that level there, it'd be about 38.2 roughly.
29 is 38.2 in this case, but exactly. It's very, very
close. 28.80 to 29 is really the zone. Like, we're not talking about, we're talking about a zone of about 20 cents there. Be very careful there. You would want that completely broken with a daily candle. If you're above 29 and the daily is trading above 29, I think you're probably thinking a bit bullish again, but it is in a precarious zone, so just trade with caution.
So one of the reasons I brought this up is to discuss last week. So we talked about this being a possible tweezer zone and the ramifications for it to drop this level. And of course, after that, it failed to make the higher high over here, which we were talking about. That's why it's important to look for those real patient reaction levels. And I want to dial into this in just a second. And then we saw a massive drop off where the markets actually got hit all the way down into pretty much close-ish to exactly where we would expect it to go. I would have probably expected another 0.2 off this. But yeah, it fell off very, very quickly. They often say bull markets take the stairs and the bear markets or the sell-offs take the elevator tie, as you've mentioned many times before. And that was definitely the case of it. Let's just quickly look at this and highlight how important it is to see these markets breaching these zones. Notice over here, we failed to get the new high. So that is a fail. And then it went to selling off. And once it got to there, it was just like a cascade, a waterfall effect to the downside. So certainly quite negative. Let's move over to the US dollar because things are moving this non-farm payrolls week. They came up. I kind of thought maybe we might have seen a little bit of a sell-off here. It failed to really make that new low. We rallied higher, and now we're putting in some pressure back into this demand zone. Now, non-farm payrolls is this week, but I kind of feel, Ty, if we get underneath this zone here of 103.90, we actually break, like, let's say a 103.80, that's going to start getting very bearish for the US dollar. And of course, we have a close below here on the weekly, 103.57 as being very bearish for it. Maybe this week's the week we get it, but I feel like dollar and currencies are starting to heat up big time. This is a huge zone for the dollar.
Absolutely. Look, that hovering above, or just above that 104, we know how important that level is. I mean, even Blind Freddy can see how many times it's interacted at this level. And often we say it a lot, but the market gravitates to important levels just before big news. Non-farm payrolls about to come out. We've got obviously big earnings. No real surprise that we're right here at 104, 104.20. That zone, one of the most important zones in the recent history of the dollar index. And when I say recent history, I'm talking about this year, of course. So and it's relevant. It's relevant level, right? So that's what we're looking for. If we, I like. I mean, it's one of those things, Tom, where it's a bit like gold in the sense that, well, for me anyway, I don't mind if it goes long or short from here because both of them make sense. If we get a breakdown below sort of that 103.50, we're going to see a continuation of that lower high, lower low sequence. And on a daily chart, that's a reversal of trend. And then all of a sudden we're going down potentially to 102.50. So it makes a lot of sense to get down to that level. But if we see a rally off this level at 104 and 104.20, and all of a sudden we're trading above the moving averages and we're trading above 104.80 again, then that's actually made a higher high, higher low sequence off the base. And then all of a sudden 105 and 106 come back into play. So I can make a case for both of them, and I'd trade both of them with equal confidence, to be honest. I think it's just really waiting and being patient in this instance, waiting for the market to actually do what it needs to do and jumping on board whichever way that train is moving.
Yeah, I mean, at the moment, obviously looks weak because the dollar has seen this shooting star rejection coming off the 75 fib of the last move. It's hit into the key demand. As you mentioned, down here, it goes lower. But I agree, getting above here is going to be huge. If that does end up happening, let's say it does something actually we saw on the UK 100, where we kind of went low and then we ended up going super bullish. And that's actually, I think, steamrolling ahead now. And we'll maybe look at that later. This ended up making this high. And if that goes to the high here and it closes, it's going to squeeze. Effectively, squeeze is the term most people would use on it. So both could be good. If you want to look at the euro on this one, we'll load that up. It would be the opposite. So, of course, the current level being weakness on the dollar, if that continues, I would actually have expected the euro to be here already. So
that's exactly what I was going to say. It's actually really interesting that it's actually failed to. I thought it should have already been there.
Weaker.
Yeah, absolutely. I thought it should have already
been.
The
German news, I'd say, coming through on it.
Yeah, interesting that it is at that level right now. If it's going to play catch up, it's going to move very quickly. I think it'll get there very, very quickly if it does play catch up. But indeed, if the dollar index powers up from here, boy, oh boy, this is going to sell off big time. And I think then we're looking at a 107 again on the euro. So, no surprises again that we find ourselves at a very, very important key level just before the news. So we're not really surprised by this, but I think it's another one of those warnings, isn't it? Where when we're approaching the heavy news and the FOMC, we've got to trade with caution. I think that's probably the word for the day or the phrase. Trade with caution, Tom.
Yeah, well, here's an example of caution, Ty. US dollar yen unwind. I thought
Oh,
I'd bring
yeah.
this one up because
Oh,
if
yeah, I'm glad you
unwind,
brought that up, Tom. I'm glad you
yeah,
brought that up
okay. What
because
would you like to talk
we
about here? You
I
go.
would love to talk about it. We have
Yeah,
been we've been talking about this for a while now, and when we said the potential of a 152 to 150 was on the agenda when it did eventually break down below that key level about 157, and you got to remember it wasn't that long ago we were sitting at 162 with a double top, and and it looked we were saying that the upside is very very dangerous here, and we also for many reasons we said trade the US dollar yen with caution because when it does move, it can be very very scary. Remember, this is a currency that is suspect and definitely in for manipulation, if you like. Not really manipulation, that's probably the wrong word. Intervention is the word we're looking for there. There is intervention. Manipulation is probably a bit
that's
rich.
another word, probably the same thing, to be honest.
It kind of is, but yeah, we have to stay diplomatic
Yeah,
here, and
exactly.
Intervention is the
Intervention. Okay.
nicer word.
Yep.
Intervention won't get us in trouble. But so you've got to be prepared that when there is potential intervention into a currency pair, there can be very very extreme moves, especially when we're like I said, we're talking about 1,200 pips away, Tom, from
Yeah.
that double top like that. You're talking about a massive sell off. And I've enjoyed it. I'm not going to lie. I'm surprised that it went all the way to 150 in one hit. I thought 152 was the target, and it was, and it went through there like a target.
Yeah, I agree. 152. I'm surprised that we didn't see more bounce off this block. I guess we did once. Then obviously we started to see it. Couldn't hold. Rejected straight away. Once that came in, if you're ever looking at this, I would print that candle and the way this played out into your mind, because that is actually repeatable. Do not buy this low when that happens. You must, like, it could still react to it, but ultimately, once you see that one, that is liquidity piling into the weakness. And at the moment there is no bid on this. We have not seen one point of bid in terms of the higher time frames. So it could keep falling all the way into the 147s, Ty.
Yeah, no, absolutely. Tom, I'd like you to go to a 15-minute chart. I just want to emphasize something
Sure.
on why we love to keep things simple on the end. We have to zoom out a little bit here. But if you go to a 15-minute chart, you're going to see, even though it looks extraordinarily ridiculous in the way that it's sold off, if you go back to when it was at 157 or 158, just a little bit, it wasn't all that long ago. Look at the lower high, lower low sequences. Look how many arrows Tom is giving you. Every arrow there is a significant entry to join what is an extraordinarily aggressive downtrend. Like, the market is absolutely getting smashed, right? It's falling extraordinarily heavily. And if you're looking on a daily, you think, how do you even trade this, Tom? What do you do? How do you get in? All you've got to do is go to the smaller time frames and wait for the pullbacks. The direction. This is why we look at the daily charts. The direction's absolutely getting smashed on the way down. But look at all of those entry points, all of them high quality entry points that you could have joined in what was already an existing, basically waterfall trend. So always go back to the smaller time frames when in doubt on how to get into an entry, because 9 times out of 10, you're going to find them on a 15-minute chart. If you go to a 1 hour, if you go to a 2 hour, you're going to see the same thing, just on a slightly bigger scale.
Yeah, the 1-2 MA is always the good way here to look at it. You're using a moving average, let's say the 20. If you see it react once as dynamic resistance, twice as dynamic resistance, then there's no reason that the third, fourth, fifth, sixth, seventh, eighth, ninth, all the way to wherever you think the next level of equilibrium could hold up. And once that breaches, of course, then you'd can it. I call it the 1-2 system on the MA's, Ty, which of course we've discussed for many years here.
Absolutely. It would be if all of you in the room share my sentiment and share your disappointment about how disappointed we are that Tom has a blue 20 moving average instead of a red 20 moving average. Please post it in the comments. Yeah, it's very, very disappointing that we would deviate away from what we've done for 17 years. We all know that red cars go faster than blue cars, and that's why the 20 moving average is the fastest moving average in the ones that we look at. Thank you, Tom. Now it makes sense. The world makes sense again. And absolutely. Look, the reason we talk about the 20 moving average so much is because it is the mean reversion moving average, okay? And it plays out the game so well in every time frame, really. So if you're looking for a go-to moving average, don't look too far past the 20. You'll hear us talking about it all the time because it is the mean reversion moving average. So it's our go-to for anyone who's wondering.
So I marked out 2 areas on oil this week, Ty. Last week, I had 78 as a key mark, as you can see here. No really strong reaction off that. I was looking at 79 plus breach to show that momentum was back into the pair. And then I marked out 75.20 and I said, very important bull zone. Now, it seems like we are getting a decent reaction here from day traders. Let's go down smaller time frames and then let's have a look here at how we've seen some reaction on as a scalper. And of course, as day traders and scalpers, we see here a low, a high, a lower low, and then we see a higher high. So basically, we've breached through this 76 area. And this is I think, a decently significant thing on smaller time frame. It points towards pullbacks being met with potential bull demand based on oil hitting the very important bull zone. And this is why we delineate to create like higher time frame levels where we believe Wall Street and other large, hedge funds and algorithms and all sorts of things will be trying to defend a position. So it looks like initially, at least on the 15-minute chart, someone's trying to defend here on oil. And I'd be looking at seeing whether we can get what has been a very oversold market back into maybe some form of rally. And this is happening while other metals markets, not just commodities markets, are also hitting the low. So we'll jump on over here to copper just for a moment. And copper's doing the same thing. 10 of the last 11 sessions before today were actually bearish. Now, that is a huge bear stat. In fact, it is incredibly oversold. One of the worst oversold copper runs we've had in a very long time. And it did what I expected, Ty. It came down and hit a new low, and then it found this bull rally point here over the last 24 hours. And of course, that's now pushing this 4.15 blue zone, which is starting to say, well, you know what? Maybe your prophecy of the mean reversion or the 20 moving average, which is now red on the chart, is a real possibility. This is oversold. There's no question that if you look at a copper chart right now, most metrics are going to show you massive overselling. I've got a lot of metrics saying massive overselling. Copper is a risky style trade, so of course you've got to, be prepared for that type of thing. But at the same time, we've got oil hitting a key zone. As copper hits a key zone, they often play uniformly, don't they? On the
Absolutely.
charts.
Yeah, they do. I think it's a very, very important area where we're at now. I do like the idea that a fast move not only will meet the 20 moving average, but also that previous low at around, that would be probably 435 ish, maybe a little bit less.
430 probably by the time it lags in.
So a very fast, aggressive move. If it happens in the next couple of days, and it can move very quickly, that could test potentially the moving average at a roll reversal zone as well. So certainly interesting trading on this one. And there we have our higher lows on the 15 minute
we're just getting into the important part here. I think this is the supply. This is still a bit problematic, but it's very close, if not already started on the small time frame, similar to oil. So copper and oil both putting in the good work in terms of maybe ending their horror show runs to the downside, at least from a TA perspective. So, Ty, we've got a question coming in here for the US dollar CAD as well. So a little bit of currency trading stuff. Let's have a look at the CAD. Now, the CAD has been in a very bullish run in recent times, and it has continued from strength to strength to strength to strength to strength, and it's smashed into this key resistance level on the higher time frames. This is why it's worthwhile paying attention to your dailies. This is no joke. This level is, if you look out in the weekly, has been consistent with markets to sell off. Now, I actually feel that this time around, we might be moving higher because it's done this consolidation for so long and it's breached through it. But I still expect some problems here and all sorts of volatility. So is it through? No. Is it above 1.4, 139? No. So it's in resistance at this point.
In my perfect world, it would pull back now to probably 137.80 and then relaunch and attack the high again. And I think if it does that, there's a really good chance it's probably going to push higher to break that zone once and for all.
Yeah, just a series. This is super bullish in the way that copper is super bearish. I mean, that is a lot of days up in a row. One bad day, really, the whole way through.
It's extraordinary.
It deserves a bit of that kind of thing.
It's very rare that you get a currency, one of the majors, which the US dollar CAD is, that can go up for so many days in a row. That's nearly a month.
Yeah, it's certainly a large move. I mean,
Yeah.
you look back on the charts. I mean, it's not unprecedented over here. Is also a big run, but again, that needed to take a breather before it was able to continue on. So, I would say it's at that level where a lot of people will try to take profit, and it's probably going to consolidate what we either call a pit, which is a pullback in time, which is basically a consolidation of price, or some kind of pullback to maybe like a 38.2. Makes the most amount of sense at this point. Thank you very much for the question. And that comes from NI. Thank you very much. Appreciate it. I noticed that's a 1, 2, 3 break. Yeah, it could be. The weekly looks incredibly good for this to eventually try to go to new high, though. These weak rejections that were really bearish ended up giving you this excellent bull trade. I can see why it's squeezy and why it's pushed, but at the same time, it's still at a pivotal area. So we've got some stuff here, Ty. We've got the US 500 and the NASDAQ trying to bull them way back up after having a pretty brutal sell-off in the previous session. We've got commodities such as oil and copper and other metals starting to find like a little bit of a bid coming into this non-farm payrolls. We have yields starting to turn as well. So here's the yield. Remember to put US02Y in your TradingView platform with Pepperstone, and you'll be able to recognize the US 2-year yield. And for the Australians out there as well, some interesting news. I just thought I'd add that in. Have a look here at the AU01s. This is huge news here today with the CPI actually staying pretty much within the RBA target. Possibly no new rate hike. I feel like every single person is wrong on everything to do with rates over the last 12 months. Everybody. And when they all call cuts, there's no cuts. When they all call no cuts, then there's cuts. It's funny as. So why I say that is because even though you can look at this is what the market basically is pricing in. So you've got here a 4.23, which actually is in a year's time pretty much being the exact same terminal rate time. Interesting.
Yeah, it's quite incredible, actually.
Yeah. It's a huge deal. I mean, nobody really thought this was going to be like this one. So great little tip if you want to ever look at the different codes around the world. You can use a lot of different codes that are relevant to your country and then be able to check out the yields of where things are going to be at. And of course, right now, the code to be really watching, guys, is this one here, US 2-year versus 10-year. So when this is what we call yield uninversion. And eventually, this is going to go underneath here. And that starts the real question about everything, because this is considered how long we've been above this is considered the bonds market warning sign for long term. Anyway, we'll get into that as we continue to do it. This is a very long-term indicator compared to just trading on short terms. Now, Ty, do we have any trade of the week that you like on the charts? Have you got anything that you particularly think, oh, wow, that's pretty good, interesting technical setup to go through?
Yeah, I actually think the one we visited earlier with the US dollar yen, I actually think that we're probably going to see a bounce of some description. Probably back to the level I believe it probably should have stopped in the first place, which is around that 152. So I'd be looking out for a bit of a bounce from here. I certainly wouldn't be just trading it. I'd want to see a series of higher highs and higher lows on probably something like at least a 15-minute. And if we see that, maybe scalp it up to that sort of 152 area, where I think it probably should have really stopped. So that would probably be my trade. If we see a series of higher highs and higher lows, look for an opportunity to get back up to that 152, which I think is a very good level.
Yeah, 152 to 152.50 seems to have most of the trade volume in it. So if we are going towards a relief rally on what has been an aggressive sell, firstly, you must have the patience to wait for the market to actually show you a turn. And secondly, you got to be fast, because it's unlikely that this will just go easily all the way back up. Generally speaking, what would happen is it would just do this. Yeah. So just be careful, of course, with those types of scalps.
Absolutely.
I guess for me, the most interesting things right now have to be in the oil markets. I think oil is superiorly oversold with copper. So we did look at those. I know we looked at the UK 100 and we thought about that from the short side, Ty, but of course the market does get sneaky sometimes. And what it chose to do was it chose to whip the low, get down a lot, like it did get down another 50 points, and then it went super ridiculously bullish. So This is also in line with, of course, the metals markets and oil possibly bottoming. Now, one thing about coils, Ty, is when they go, if they do have a false break on one end and then they go off to the opposite direction, good rule of thumb is they go ballistic.
Yeah.
So I kind of feel like this is going ballistic right now. And I have mentioned that for a couple of days since we saw it do that opposite thing where it went one direction, broke for 50 points, went really quick, and then just went ballistic back. Sometimes that happens. And you got to remember, if that does happen, then it can go absolutely wild in the opposite direction. I feel like it's probably trying to do that right now. And this if oil does improve, remember the UK economy, for anyone out there that's knows the UK economy, generally it's like financials, energy markets, and metals. So it's kind of like Australia. We've got the big three. They've got the big three as well. So if they're turning, it could be pretty wild. Another one would be crypto as well. So let's have a look at this because, of course, Bitcoin, we've been pretty big proponents of the bull end here from a technical level. We broke the trend line to the downside. We breached. We thought that was incredibly bullish. And I continue to think this thing is actually getting ready for a new all-time high. Now, one of the reasons I wouldn't be too worried about it coiling around in here is that's, again, not a bad sign. It's made series of higher highs and higher lows for now. It's holding this important bull zone, and it's kind of just sitting there chopping. Now, if it chops for a while, Ty, and it does it before it hits the high, if that then breaks out to the upside, it could go ballistic, couldn't it?
Yeah, absolutely. Yeah, absolutely. It's doing all the things. Well, I think we all expected almost. We've talked about it for a little bit. We're nearly waiting for that move, aren't we, to really test that 72,000, and there's no telling where it's going to go after that. But you're right. I think the coil is important. It needs to find some consolidation. We wouldn't want to be selling off from here again, though, in my opinion. Like you wouldn't want to see it be back at 57,000. I think that story might be over for a while.
Back at 57 would be a disaster for Bitcoin.
Yeah, I think so.
Disaster. We don't. No. We don't want that. Either way, it's at the moment it's had actually some excellent trades. And again, the reason I like Bitcoin so much is had three reputable, really replicable trades. Particularly like this one over here, very replicable off 64. Another one from our day trading masterclass setup, actually. We've got BTC here, original BTC, saying, what's going on with the odd US dollar, guys? Yes, so this was getting hit on day to the downside, and it has continued. Now, I don't know if it's loose flips or what it is in particular, Ty, but it was getting hit so hard coming into this CPI. Clearly, someone was able, or at least an algorithm or somebody was able to figure out that inflation had actually not gone up in the same rate. This is actually an in-building price that we're not going to possibly do a rate hike, which was more pricing in over here. So therefore, it's weakened off. Now, that's the fundamental macro side of things. From the TA side of things, it just about is hit where I would expect it to find significant buying pressure. So just as everybody gets onto that idea and says, oh, we're not going to see a rate hike now, or at least we're going to see a pause or further pausing possibilities, I feel like it's getting right to that level of support, which is a little bit sneaky. And this for me as well, man, if this did this, imagine if it did that, it would be actually quite bullish.
I think there's a reasonable chance. I think it is at a very, very key support. It's definitely a key support. I think there's a reasonable chance that could happen. I'd be looking at those high lows from this level.
Yeah. I think small time frames here as well. I know BTC knows what's up in terms of finding structure around here, but I do feel like that 75 fib coupled with the kind of hidden level of support, which is always great if you recognize something that other people don't. Like somebody asked me what I thought about odd over here. Well, I only had the fib. I didn't have anything. I didn't know what the hell was going on with the odd over there. I really didn't. I just thought it was kind of weak still and didn't do anything for me. But now with the news unveiling and everybody probably starting to present, oh, okay, I get what it means now. Yeah, I could see a bid coming in here. So it's small time frame, certainly worthwhile look. And this is why we do these higher time frame analysis, so you can break it down with your systems on smaller time frame. All right, guys. Well, that brings us to the end of the show. I guess we'd like to say thank you so much for your time. It's always much appreciated. Things to watch out for this week, of course, FOMC today during the session in the US, which is going to be a big announcement about interest rates, more likely signaling a rate cut potential for September. And then we've got non-farm payrolls, which is 8:30 a.m. New York time on Friday. And remember Meta at the end of today in terms of announcement. Then we have Amazon and Apple on Thursday close, I believe. And all of these events, you may think, well, they don't matter to me. It will, because these implied volatility moves by the options market at the time of fragility here in the market, they are moving $100 billion minimum in a session. I mean, years ago, Ty, that would be called that's like, what is the size? What was Lehman? What was Lehman's size when it went under? 55, 60, 100?
Something. I think it was under 100.
Someone in the channel wrote.
Yeah.
It wasn't that much in comparison to the moves we're seeing.
Incredible.
I call it almost the Bitcoin market, the stock market at the moment. But yeah, incredible implied moves. So just keep a lookout for those. Either way, follow the price action, guys. From Tyron and I, would like to say thank you so much. And we'll see you next Wednesday as well to discuss the aftermath of what's going on this week.
Absolutely. Thanks, everyone. Have a great night.
See you guys. Bye.